So today's topic is the credit in the financial system. Before understanding how the credit system works in India, so the credit is the availability of money for the people. Financial system is the appropriate system. How does the system works? System means an interconnectedness with a group of activities. So in relation to finances, what is the system which is happening in India, and in special concentration on the loans which are available to people. This is the main theme of the lesson. Now moving on to the concepts which are covered in this lesson are the bank deposits as money, the loan activities of banks, why people require credit. In this part we are going to discuss about three main topics. So bank deposits as money. So the money what we deposit, for example, when we go to any bank, we find generally two kind of people. One people who are depositing money in that. The second category of people, those who are withdrawing the money from the bank. So these two people are common features in any bank. So when we go and deposit money in the bank, we are paying in the money. When somebody is taking back the money from the bank, it is called withdrawal of the money. So pay in and withdrawal are the common procedures of banking. But if the case is, if all the people who have deposited their monies in the bank will ask the bank to pay it back again the same time, then the bank would be in trouble. So the bank's deposits as money means here that out of 100% of people, out of every 100 people who have deposited their money in the bank, they don't ask back again the money in the same time. Out of that 100 people, 80 people don't ask money back. Less than 20 people ask the money in the form of bank. So when they ask it back, every bank holds 15% according to the RBI rules in India as a cash, and the remaining amount they put it in the liquidation state where they can issue loans, where we are going to cover this one in the loan activities of banks. So when the bank deposits as money was deposited in the bank, and when all are not asking back the money at the same time, obviously this makes a point very clear that the bank has 80% of the deposits on its hand and 50% as cash disposal amount for it to dispose whenever it is required to give to the people. So in this way the banks act as the deposits and as money, and here we have to remember that all people at the same time they don't try to withdraw the amount. Only a few people try to withdraw the amount which is required for them. The other people save it for future purposes, save it for educational purposes, save it for their retirement plans, save it for their marriage plans. In this entire process, this can be done, and this leads to the development of the banking, and also the banks issue loans to others which makes them to build the infrastructure and various other activities. Now moving on to the second activity, that is loan activities of banks. The loan activities of banks are very important. Nowadays, when the situations are in progress, the modern era where the need for loans has increased more. For example, if we take a farmer, earlier farmer used to do cultivation, his family members used to support them, he used to buy the pesticides, seeds and only few fertilizers. Other than this, remaining entire work of plowing, sowing, seeding, threshing, all these things will be done by the particular family members, if not their close relatives. But today all the activities need more number of workers, more amount of money to buy the seeds, more amount of money to get the pesticides, more amount of money to buy the fertilizers, and all these things made the progress to become costly in regards to agriculture. So obviously, in a country like India where the average land holdings of people is very less, it makes them less than 2 hectares of land, then obviously it makes them to clear that they are going to have it very from any person who lends them. This lending process is called loan amount. So they take the loan in order to do the agricultural activities. This is one type of loan. The next activity of loan is, for example, if you run any business and suddenly you got an offer of bulk opportunities which has to be delivered within a month of time. So obviously you need certain amount of money, more employees to be employed under your work to make it fast and to deliver it. So in this way you can take amount from the person who has requested you to do the work as 50% in the cash or as a check, and also you can raise certain amount from the financiers and ask them to give it for interest, so that after the work is done, after the delivery is done, and when you get back the payment, you can return the payment to them. Because you need to employ more number of workers, you need to get more amount of the resources, you need to get more amount of the output packing and everything rather than your regular limit. So you need more number of employees. In this case also we need loans. Nowadays, as the business activities are increasing, companies in their plans of expansion also need loans. So they put their assets as surety for them, known as collateral assets. These collateral documents or assets are required for us to get loan from any particular bank. This will obviously make us bind as a surety or security for the amount what you are taking from them. And this makes us very clear that you are going to take certain amount as your requirement. And you have to repay back in a small installments. This is one purpose. Some people take personal loans. Personal loans for their personal engagements, marriages, educational purpose. There are different kinds of personal issues where we require money and they take personal loans. And we also take educational loans. We also take benefit loans of housing and all these things where you get lot of amount and you need to pay amount for many couple of years. So in this way we have the loans process increasing day to day, and the trend has increased a lot that today everybody tries to take a loan amount rather than fixing it, earning it and doing it. They pick up a loan, they build it, they establish it, they explore it, and they pay the EMI amounts very easily. This is a process which made available in the modern generation era. So there are various situations which arises the situation of taking loans. For example, it may be an agriculture, it may be a business proposal or expansion, it may be a company's expansion policy, it may be a personal wish, personal loan, educational loan, marriage purpose, whatever may be the reason, the loan's purpose has been increasing. Again, in these two types of loans are present. So, why do the people require the credit? Why do people take loans? As we have discussed, there are various reasons of taking loans, and in particularly, if we concentrate on the agricultural backdrop of the people, village people, they need money nowadays to invest on cropping, and once the cropping is done and they require to do the agricultural sector or to cultivate their fields, they are forced to buy seeds, fertilizers, pesticides, which is the utmost criteria for the modern days. And in order to ensure they get the high quality of seeds, they have to pay huge amount of money. They have to get the branded things which are required for them with an assurance. They have to go and buy the machinery. This machinery is nowadays very costly. We have to buy tractors, we have to buy the machines which do the agricultural activity. Earlier we don't have any machines which do the agricultural activity, and we need not buy them because bullock carts, men, women have replaced them earlier, but today they were replaced by the machinery which does the hard work, and we need to buy that one with a certain amount of money. And the next aspect is